We have a lot of people in our company that they make crazy money just selling insurance. We have a lot of people that make multiple 100,000. We have dudes that make over $1 million. We basically built a huge business. It's been almost 5 years now with our current company. Like you said, we were able to sell it about 2 years ago, and it's been a crazy journey.
Did you ever have the intention of getting acquired or selling? Was that even a thought?
Insurance business is awesome. The way it's structured, I always tell people, is very similar to a real estate brokerage, pest control, solar, any type of sales. You make money one of two ways, or both, if you're good and you're smart. You make money on when you sell stuff, and you make money on the team that you have when they sell stuff.
Welcome back to another episode of the Austin Zaback Show. Today we have Hayden Hill on the podcast. Hayden is somebody who I've actually known for quite a while. We did our first network marketing company way back in the day, which I'm sure we might dive into here in just a little while. But Hayden has done some extraordinary things. You know, he went from network marketing to insurance and really dominated that space, you know, and multiple people left that industry, got into I feel like everybody either went insurance or like real estate.
Oh, yeah.
Or they went back into network marketing,
Yep.
right?
Yep.
And, you know, you're somebody, Hayden, who dominated the industry. We're going to talk in a little while about how you actually built a company, ended up getting acquired by private equity, right? And which is something that, you know, I think probably very few people, I mean, I've never met somebody as young as you who's actually accomplished something like that. So I'm excited to dive into that. And then obviously, you know, you have a ton of different things that you're investing in now and doing, and we'll kind of peel back that onion. So if you're watching the show, make sure you stay to the very end. And Hayden, I appreciate you being here.
Yeah,
bro.
thanks for having me, man.
Yeah. So walk me through a little bit. Let's just start from the beginning and just do a quick recap, you know. So you did Vima, right? I did Vima, Verve Energy, right?
Oh, yeah.
And when was that? Like 2013?
Yeah, 2013, 2014.
Okay. Yep. So we did that, you know, and then that kind of got shut down, right? We kind of all were forced to kind of go, you know, do a new thing, right?
Yeah.
And a lot of people, you know, for people watching, they might be familiar with people like Alex Morton and Brad Alcazan and different people, right?
Yep.
And so some of these people, you know, they went and got back into network marketing. They joined a different company. They rebuilt it. But a lot of people, you know, like myself, I went into real estate and I went all in, right? And I think I remember Mikey, and there were several other kind of people that I went all in on what you did, right? So kind of walk me through that choice. Like what made you go to that industry? And then how did that all kind of come to be?
Yeah. So I had just graduated high school. This guy that I knew, like kind of knew, but like wasn't like totally friends with him. He texted me and my best friend, and he was like, "Hey, come over to our house on Wednesday night during the summer. We have something cool to show you." And me and my buddy are like, what the heck's going on? Like, is this guy going to try to like fight us, or like it's kind of weird because we don't like really know him. So we go to the meeting, and it was a Verve opportunity meeting, and there was, you know, 6 or 7 or 8 people there besides us. Turn on the TV, they have the video, if you remember it, with Alex and, you know, BK and all those guys. And for the first time, I think after watching that, my mind started to expand and see other paths than just kind of the path I was on, which was, you know, like everyone says, go to school, get good grades, you know, finish college, go find a good job, retire, you know, or invest and then retire someday. And I was just starting school at that point, and so decided to, you know, pay the whatever $500 for the fee or whatever to start. Did that, had a little bit of success, but it was like, I mean, I was 18. It was like a super part-time, like, hey, a couple grand a month kind of thing. Cool. But during that, mine was expanded, learned a lot about sales, recruiting, all that kind of stuff. Obviously the company, you know, ended up getting shut down. And so didn't really do anything, for about a year. I was finishing up at Arizona State, over the next couple of years. I was like valeting cars part-time, just kind of, you know, making some money, being a student, whatever. And Alex, who I'm good friends with today, appreciate the heck out of him.
Morton?
Yes.
Okay, cool.
He's helped me so much. And one of my buddies at the time, we asked him like, "Hey dude, what should we do? We don't want to do network marketing anymore." They were doing the thing where it was like the rub on your skin and like it, you know, skin fault. Yeah, whatever.
Yeah.
And so he was like, dude, I would get into sales, whether it's real estate, insurance, mortgages, whatever the heck it is. And so we started looking at some things, and he said, "Hey, actually my dad retired from this company that basically he worked at for, you know, so many years, built a business, and he gets paid residual income for the rest of his life from stuff he did at that point." So I had heard about residual income, in Vima, and, you build a team, get checks. And so I was like, okay, that's pretty cool. At that time, I think at this point, I was turning about 20 years old. I was like, I didn't have any idea, but I'm like, residual income, unlimited income, helping people. I'm like, that's pretty cool. So I started studying for my insurance exam. I failed it 2 times. Third time I passed it by like 2 questions. So, not a hard test, but when you're a student, it's hard to manage everything. So pass the test, get started. And, the company, I always told people, super grateful for the first company, but I didn't choose the company. It kind of just was like thrown out there, and I was like, oh, okay, cool. I know people. I didn't know anything about compensation rates, leads, marketing, structure, whatever. So did that for about 3 years. Had success at a young age, nothing crazy, but multiple 6 figures, built a team. Some of my guys were making 6 figures, it was cool. So after about 3 years, and our business has changed a ton in the last couple of years since COVID, we were all in person. So like literally we would be calling people on Monday and Thursdays, setting appointments for the next 2 days in person, whether it was Phoenix, Tucson, all Maricopa County. Like, dude, I was putting on like 40,000 miles a year on my car. Wow. We'd go out and see these people. We would, help them with their insurance. We get paid. Cool thing about the insurance industry is once you sell a policy, you're typically getting paid anywhere from like 1 to 3 days after you sell the policy. Oh, wow. And they give you a big advance. And so did that. And really like a turning point for me was at the end of like my 3.5 years with that company. I started kind of questioning the industry. A lot of my buddies that I recruited and came into the business and I trained, they're sharp people, and they just weren't making the money they wanted to, whether it was the compensation at that deal or the leads or whatever. So I basically was like, hey, like, I think I'm done with this whole insurance thing. Wow. I have a lot of experience now. At this point, I'm 23 years old. I'm like, you know what? I'm going to go get a really good job. So I start looking for jobs, and me and Nina had just been dating probably for like 1.5 years or so now. And there was a period where I got like 4 different jobs. Mortgage loan officer, passed my mortgage test, almost did that. Tech sales, like UPS, like sales, whatever. And then medical device sales. Went to the first 3 jobs for 1 day, and then 2 days. I got the job, went for the first day, I quit. The first day I quit, and then the other one lasted 2 days. And the reason why is because I was so used to, at this point, the unlimited income potential, that I saw this and kind of like the numbers they were showing me that were possible. I was like looking at their leaderboards, like they have in the office, like their awards, and I'm like doing the math backwards. And I'm like, wait, they said you could do this and it was unlimited, but the top guy or gal in the office is doing this. Like, I don't know if it's for me. So got a really good medical device job with a huge company. Started doing that. I had no idea about, what it really entailed about going into hospitals, whatever. Yep. But in that deal, I worked really hard for about 1.5 years. I was going in like hospitals, like full scrubs in the surgeries, meeting all these surgeons, which a lot of the surgeons are like big car guys around here. So it was pretty cool to hang out with them. But did that for about 1.5 years, and then COVID started to happen. Basically, the whole promise the whole time was, hey, you do really well, you're a top 5 rookie, you basically get a huge bump in pay, and you're gonna get basically double pay what you're making now, multiple 6 figures. And at that time I'm like, it was a good job, super secure, benefits, whatever. So COVID starts to happen, and what do they say? Just like every company, hey, we can't do any promotions, we can't do anything. And I was like, well, that sucks. And then on top of that, it was like we couldn't really go into hospitals or do anything. So I was just like at home, like playing Xbox for like 4 or 5 hours a day. I was making the same check regardless if I went to the hospitals and sold anything, which I couldn't. And at this point, my wife, Nina, she was with our previous insurance company. She had started selling a bunch of insurance with our current insurance company. And a lot of people that, weren't doing too well at our previous insurance company, they were over at our current insurance company, and dude, they're making crazy money. Like, I'm like, dude, how, like, this guy couldn't even make, $5,000 a month, and he's making 40, 50 now. Like, how is that happening? So I still have my insurance license at the time. And, obviously Nina was doing well. And I was like, you know what? I'm going to start selling insurance part-time, see what happens. So did that for a few months. I was like, okay, this is legit. We're still in person at that time. So I was going in like, weekends and at nights. Started making more money pretty quickly, working 2-3 days a week in insurance than I was for the whole, 2, 3, 4,
Yeah.
pretty much a whole month in medical device. And I'm like, you know what, this is stupid. I'm like, I'm not getting promoted here. I have my insurance license. I'm doing well. Nina's doing well. I'm like, why don't I just go all in back into insurance? It's a different deal. It's a different system. And maybe, this can be the thing where, I win big. And so, basically went full time in that, and we basically built a huge business. Been almost 5 years now with our current company. Like you said, we were able to sell it about 2 years ago, and it's been a crazy journey.
Dude,
So
yeah, it's insane. I want to peel back that onion. There's so many layers to that story that are awesome that I want to peel back. For anybody who might be watching, Hayden, that they're not extremely familiar with insurance, can you just break down, what type of insurance were you selling, I guess, in the first company? And then did it change when you went to the second company? Like, are we talking about life insurance? Are we talking about whole life? The infinite banking stuff? Like what exactly were you selling?
Yeah. So the first company that I started with, there's basically 2 routes to go in the insurance business. One route is captive.
Okay.
What that means is you work for one company. You can only work for one company. What I mean by that is like a State Farm is a great example of that. You work for a State Farm. You can only sell State Farm's 2, 3, 4, 5, 6, 10 products they have. You're not selling Mutual of Omaha or any Nationwide or any, you can't. That's one way. The second way is you're a broker, which that's what I am now, where you can get you're an independent contractor. You get contracted with as many insurance carriers as you want. And basically you pick what company and product you want to sell to people. So the first company I was with, I think they had like 4 products, super, super basic, which, starting out, I can argue that was great because I was able to really keep everything super simple, focus on a few things to be good at. But now what we sell is a brokerage is a lot more options. And so whole life, term, index universal life, the tax-free retirement stuff you see all over social media. We sell annuities, which is pretty cool. You can use your life insurance license to sell annuities, which is, more of an advanced like retirement financial product. We sell a little bit of health insurance. Most people that get their license, they can sell life and health. I would say health is more of a long game. So you're getting paid kind of like monthly versus life is really quick money up front, not as much on the back end as health. But you get paid a bunch on the front. So
got it. Okay. Makes sense. So what is the most common type of insurance that you were selling, I guess, in the beginning? And then when you became a broker, like what's like the thing, like how does it work? When somebody reaches out, like what are they typically looking for on average? Like, and like, what are you going in and what kind of solution is going to be like the most common solution that you have to their problem?
Yeah. So, I'll unpack that. There's a couple different layers to that. So like the first company, there was the captive company. Most captive companies, the way that it works is they give you leads and basically you're going and you're selling them like you're basically figuring out when you're there at the kitchen table with them or over Zoom now, ever since COVID, what they want. So it's more based on what the company is geared towards, whether that's, there's so many different things out there, but whether it's like a whole life for like funeral coverage, or if it's like a, term to replace income, they say you should have a certain amount of, 5x, 10x your income, you make yearly in life insurance if, for when you die, with your family and stuff to make sure they're okay. The model we're at now is what I prefer because for me, like I'm not like a super outgoing guy. I used to be super introverted. I'm, trying to expand more and everything. But like what I always tell people is if you don't have leads, just like any business, if you don't have leads, it's so hard to make money, especially in sales. So when we buy the leads, there's multiple different types of leads you can buy. There's people that just want term. There's people that want mortgage protection. There's people that want funeral and final expense coverage, which is like whole life. There's people that want annuities. They want to protect their money for retirement. And so you basically can choose what kind of leads that you want to run. And then let's say I buy a funeral and final expense lead. It's someone that's older. I'm calling you. There's no question about what am I gonna sell you? They requested that product.
Mm-hmm.
And so, sometimes of course you pivot and there's different things that might be better for them and they just don't really know what they're looking for. But 9 times out of 10, the kind of lead that you buy, that's exactly what they want, and that's going to be the product that you sell.
Got it. Okay. And that's the model that you do now with the brokerage. So with the brokerage, like you can buy leads. So you can like, does it work kind of like, okay, I'm going to pick like there's this company, this company, this company. I'm going to buy a little bit of leads over here, a little bit from them and a little bit from them. Is that kind of how like, it's like an a la carte, like?
Yes.
Okay.
Yeah. Some people, they create their own if they're like good at marketing. There's a bunch of different vendors and stuff like that. There's so many options. We used to be so direct mail, like postcards, people fill them out, we get them. It's gotten really expensive for direct mail, I'm sure with every business. So what we've basically switched to now is pretty much all online digital. Okay. So, Facebook, Google, people are calling in, YouTube, anything that's social, that's the quickest and the cheapest option that agents can get in for not having to pay $90 for a direct mail kind of deal.
Got it.
So
what is your favorite type of insurance to sell, like strictly from a sales perspective?
Yeah.
And like an income for somebody watching who's just strictly focused on they kind of have the blinders of like, okay, I want to get into insurance and really I want to make good money, right? Yeah. What's like your favorite?
So it depends. Everyone has a different situation. Obviously, you go through it. It also depends on their health and their age. So if you're on certain medications at certain ages, maybe you smoke, like there's different things going on. Sometimes you can't just be like, hey, I want to look at all these different things. It's like, hey, no, Austin, since you have diabetes and you smoke, actually whole life or term or whatever it is the only option for you. And then from there, you look at the different companies, find the best rates, find the best benefits, find the best products. For me, like if you were to ask me for you right now, what's the best kind of insurance? You're young, you're healthy. I would say there's 2 that I would recommend. One of them is a big term policy. Now, they're cheap. They're 30 years typically. And so, you're close to 30 or 30, it's going to last you till 60. You do well, like you're doing now. By the time you're 60, you're going to be self-insured. Maybe you get another insurance policy, but you're probably going to be self-insured. The other kind, which this is might ruffle some feathers. I've seen some of your episodes and I've seen people talk about them, but I'm an insurance salesperson, but I'm also, I consider myself very educated in like different investing things, stock market, real estate, all these things. So I do like index universal life policies. Are they better than the stock market and 401ks and real estate? Depends on how you look at it. It's not a one size fits all. So like there's a lot of people, especially on social media, that are like, IUL, it's the best thing ever. The stock market's, and I'm like, dude, the stock market returned like 26% last year. What do you mean the stock market sucks?
Yep.
And so those are great policies, the IULs, but you need to have other things outside of that to make a full picture. And I think that's something, for insurance people, that they have to make sure it's not a one size fits all. It's, hey, we're creating basically a package. If your company matches your 401k or IRA, dude, do that. It's free money. Yep. Also have a term, have an IUL, have real estate, have stocks, all these things. But that's what I would say for like young people. And then once we get to people that are older, typically term's really expensive. Typically it's hard to qualify if they're unhealthy. And so what most people get when they're older is just like a basic whole life, 20, 30, 40, $50,000 whole life. Whole point of it is, hey, if I die tomorrow, it's going to pay out, 30, 40, 50 grand to my family. It'll cover funeral expenses. They'll have 10, 15, 20 grand extra.
Sure.
So that's what I would say.
Got it. Okay, cool. Yeah. I want to talk about, if you're super familiar, which you are obviously, about the IUL and the, that kind of model. Cause you're absolutely right? Like that is on social media, super popular, right? People might know it as infinite banking, right? And but really, the way that I understand it, and to be very clear with the listeners too, Hayden and you, I don't have any life insurance right now. I have zero policy. I have zero anything. I'm 29 years old. I think I'm pretty healthy. I work myself to death, so I probably am shortening my lifespan a little bit there. But I do want to get into it. I actually just talked to a buddy of mine like a week or two ago about some of the IUL stuff, because I don't really understand it. Like, I'm going to be honest. Like, I'm a real estate guy through and through. I understand crypto. I understand the stock market to a degree, right? But when it comes to like whole life and it comes to some of this stuff, I'm like, whoa, it's like way over my head, right?
Yeah.
So can you maybe break a little bit of that down in layman's terms? Like we're talking to like a fifth grader here.
Yeah. And that's what I like, because when you're you're investing in anything, this is an investment, your life insurance. You need to understand it. And if it's too complicated, like what I typically do is I'm like, hey dude, I'm out, because I don't understand it. If I don't understand it, I'm not going to put money into it. So I think also realizing that, salespeople are salespeople. They want to make money. And if it sounds too good to be true or anything, then it probably is. With these policies, you need to get educated and look into them. Yep. Fees, tax things, how much money is going towards the death benefit versus the policy. So to break it down and keep it super simple, when you look at these policies, if you are looking at it as, it depends on what you're looking for. If you're looking at it as a death benefit, then you don't mind if a lot of your monthly premium goes towards the death benefit and a little bit goes towards the cash value, because you're looking for the death benefit. That's what you're looking for. Now, would I argue at your age, a term would probably be better for that? Probably. But these IUL policies, the way they're used and the way they should be used is for tax-free growth and cash value for tax-free retirement.
Got it.
When you're paying a premium with those policies, you need to make sure they're structured correctly. What I mean by that is the most minimum amount of death benefit and the maximum amount of money going towards the cash value in the growth. Now, agents typically make more money if the death benefit's bigger and the cash value is lower. And so there's a bunch of different companies out there, and there's a bunch of good ones out there. You just need to make sure, one, you get with someone who's an experienced agent that knows how to do it. And, if you have questions, call the company, talk to them directly. On the other side of it, the whole infinite banking thing, typically we're looking at whole life policies for that. Those ones, you have like a fixed rate. So typically, IULs, depending on how they're structured, 6 to 8% is what you should get. With the whole lives, a little bit different, because it's not like an IUL can be 5, 6, 7, 8, heck, it can be 9 or 10. It's just kind of up and down depending on the market. Versus whole lives, it's like, hey, we're going to guarantee you in the contract in writing that you're going to make 3.5%. Okay. 4%, 3%. Now, a lot of these companies, a lot of the good ones, there's a bunch of them around here. The big ones, they also pay dividends. They're not guaranteed, but most of the companies haven't missed them in 100, 150, 200 years. So you can tack on another, 1.5 to 2.5%. So then you add the 3.5 to the 2.5. Okay. You're at 6%. You can pretty much count on that as it goes on. So that's just kind of, that policy is more if you're like, hey, I don't want to take the gamble of the up and down of maybe an IUL. I want the guarantee. But really with the whole life, what I like and what infinite banking truly is you can actually put money into it. We call them front loading them, and then you can take the money out of it. So if you're an entrepreneur, that's pretty cool, because you can say, hey, I'm going to put 50 grand into it to start my premium. And then 30 days after, I'm going to take a loan against my 50 grand. So I'm going to take the 50 grand out, or most companies will let you take like 90%. So let's say 40 grand. Okay. We're going to take out my 40 grand. It's a loan. So let's say the company is going to charge, 5, 6%, 7% in today's environment. But as an entrepreneur, hey, that 40 grand, I can go make 10%.
Sure.
So now we're almost, hedging from, hey, we have to pay 6% interest, but we're going to get 10% or higher. Well, that's a pretty good deal. And then with that, the interest grows on the full amount. The interest is growing on 50 grand. It's not growing on 10 that you have left because you took out 40.
Sure.
It's growing on 50. And so, like I said, those are all great vehicles. It's not a one size fits all. So these people that are like, hey, you don't need to have any retirement or anything, just do an IUL or a whole life. Dude, that's 100% wrong. And I'll be honest and tell you that, where most people won't, because they want to get paid. But with the business, and if any agents are watching out there, it's like, dude, do the right thing, because you do the right thing. And guess what? It leads to referrals. Clients are happy. They want to buy more. They have kids, they have grandkids. And so, great products. It's a piece of the puzzle. It's not the whole thing.
Yeah. Can you explain the difference between IUL and whole life? Because I don't think I'm actually, like, I understand it, but I guess I thought that they were one and the same, but they're different. Correct me if I'm wrong. And then what does IUL stand for?
Index Universal Life.
Okay.
So Index Universal Life, whole life. Some people will merge the term of infinite banking into IULs, but the definition really of the infinite banking is participating dividend paying whole lives.
Got it.
That's what it is.
Okay. So not IULs.
No.
Technically.
Technically.
Right. Okay.
Yes.
Got it. And why not? What makes that distinction? Like, just if you're talking to me like I know nothing.
The reason why is that infinite banking is the whole be your own bank kind of deal. With the whole life, it's really easy to get the money out.
Yep.
So it's really easy to get, 90% out. You can take money out and borrow against an ex universal life policy, but with the whole life, the dividend paying whole lives like that, they are designed to be used in that fashion of the infinite banking.
Got it. Okay. In your opinion, Hayden, who is a great candidate for this infinite banking product, right? Because you see a lot of people that they say, hey, everybody's like, to your point, right? Like they're like, everybody's a candidate, right? Like if you have 200 grand in the bank, just put your 200 grand in a whole life and then take it back out, right? But it's like, I mean, I like they're like you said, they're good salespeople.
Yeah.
But it's like that can't be true for everybody, right? Like it can't be a great fit for everybody.
For
so
sure.
like, in your opinion, who is it a great fit for?
For sure. So one of the main things about really any type of insurance, but especially these advanced products of IUL and whole life with the infinite banking, one of the main factors, if not the main factor, is the cost of insurance. What goes into the cost of insurance? It's your age, it's your gender, it's your health, and it's your habits. So if someone is a little bit older, maybe they smoke or their cost of insurance is going to be high. So it's going to be hard to get those good returns that they're trying to get. It's just not going to work out the way that these guys are preaching it. Now, if you're young and you're super healthy, you don't have any felonies or crazy stuff going on, you don't smoke, whatever, dude, your cost of insurance is going to be low. And so you can get those. And so I would say these products 20 to 50, that's kind of the range. Of course, with insurance, it's one of those things where the sooner you can start it, the better, because the price locks in. So of course, a healthy 30-year-old is going to be a lot better off than someone who's unhealthy and 60. It's just,
the reality.
It's math. It's
yeah.
So.
Because these insurance companies, they're betting the odds. I mean, that's just the reality, right? Like an insurance company is looking at a human and they're saying, okay, what are the odds that they're going to die tomorrow?
Yep.
Right. And they're playing that game and they have to win more than 50% of the time or they go out of business. I mean, it's just the truth, right? Like the truth of the matter is like, if they're wrong more than 50% of the time, they're bankrupt.
Yeah.
If they're right more than 50% of the time, they're very wealthy and people are very happy. Right.
Yep.
So, and that's just a fact of the matter, so yeah, talk to me a little bit about that process too, for people who might not be familiar, even myself, like how do these insurance companies go about actually figuring all that information out? When we talk about like, you're a smoker, non-smoker, healthy, not healthy, like,
yeah,
I mean, I'm just saying, like, why wouldn't somebody just be like, why wouldn't a smoker just be like, I don't smoke?
Yeah.
Like,
no,
you know what I mean?
Great question. Yeah. And clients ask that kind of stuff. Yeah. So there's going to be two kinds of kind of insurance. The easiest, most simple, quickest way is the simplified issue insurance route. What that means is like literally we could whip out your iPad. I could write you a policy right now in 10 to 15 minutes. And what the company is going to do is there's no physical exam. That's the simplified part of it. There's no urine analysis, no blood, nothing. All they're going to do is have me ask you 15 to 20, 25, 30 medical questions. Yes, no, yes, no, yes, no. The insurance companies are ninjas, so they know everything about you already. Yeah. You sign the HIPAA form, and what they do is they run a medical check and a prescription check. Basically, it's kind of, I always tell people, it's kind of like your social security file of your health. Yep. Any prescriptions that you're on, any ones that you've picked up or that even have been filled for you that you maybe didn't take, any hospitalizations, doctor visits, they see everything. And so like people, if they try to lie, they're going to get caught because they're going to see the thing. So that's one thing. The other thing is all these companies have something called a 2-year contestability period, which means if you die in the first 2 years of the policy, the insurance company will investigate and look into everything. So if you told me, oh no, I haven't, been to the doctor, I had any issues in the last, year, I'm not on any, heart medication, and they find out that a few days before you told me that, before I hit the medical records, you were prescribed that, dude, they're not going to pay out the claim. They'll refund the premiums back to the family, but they're not going to pay it. A lot of people also, they say, hey, I'm healthy. I don't mind, peeing in a cup. I don't mind getting a physical. I don't mind, doing a telephone interview. Like what it is. That process is going to take a couple weeks to a couple months, but the cost of insurance is reduced drastically because the company is really, really diving deep into you to make sure, hey, they're as healthy as they say they are. But it's crazy, dude. There's these actuarial science companies that are like huge companies that literally, like, I don't even know how they do it, but they have the math on every single gender, age, medication, whatever.
Wow.
And they make up the ratings, and they make up basically the scale to give the insurance company. So then the insurance company can basically say, hey, someone who's 64 and diabetes, chances are at X age, they're going to pass away. Okay. And they do the math, and that's the rate.
Yeah.
And so it's pretty crazy.
Yeah, it is wild when you think about it, right?
Yeah.
And the data that they have is insane. And the fact that they're really probably pretty dang accurate the majority of the time. Like they can probably predict, roughly what age you're going to pass away before anybody else can.
Yeah.
Because they've got all of the data in the world to support it, right? Yeah. What, this is kind of a random question, but like, have you seen any young, healthy people that like, are there any like medications or anything that like you've seen time and time again where it's like, if that person's on that thing or had this thing happen, even though they're young and even though like they appear to be healthy, these insurance companies jack up their rates and jack up their premiums?
For sure. Yeah. They either jack up their rates or they just decline them, flat out. Insulin diabetes when you're young, that's a hard one to get approved or you're going to be rated. Anything that's like heart medication, anything that's like crazy, like depression, bipolar medication, like brain stuff. On the other side, any like crazy felonies, DUIs, that stuff plays a factor into it.
I heard they even check your speeding. Like if you like your ticket, like if you speed,
it's a risk.
Yeah.
It's like, okay, I'm going to give this guy this great policy, but they just got caught going 130 into 65. Like, maybe it's a little bit risky.
Yeah.
And so it's a lot.
Yeah, that's a ton, dude. Like when you really think about that, but to your point, like you get to pick, right? When you're the person trying to get the policy, you can go to simplified, right? Pay the higher rate, pay the whatever. It's called simplified, right?
Yep.
Or you can go and choose to basically let them dig into your past and into your present and make their own determination, right?
Yep.
And I feel like people would know, like if you look in the mirror, if you're gonna have a problem or not. Like most people know, right? It's like I know if I got 10 tickets in the last year, that it is gonna hurt my chances. I know if I'm on medication. I know if I'm not healthy, right? That type of thing, you know. So, infinite banking school. Have you helped a lot of people do that? Like get involved in that?
For sure. Yeah, we really focus on like the more simple products when we were kind of first starting out, the final expense, the term, all those kind of products. We still do, but in the last year and a half, I'd say, we've really switched our focus to more of the advanced things. Going for the higher ticket sales. We're going for the more expensive premiums. So Index Universal Life, the infinite banking, annuities are a really cool tool that we have to help out people not lose their butt in retirement, because their money's safe.
Can you break down what an annuity is?
Yeah. So there's a bunch of different kinds. There's, variables, there's fixed index. For the variable stuff, which is basically higher risk, higher reward, you can lose money, but you can also make more money than like a simple one. You have to have your securities license for that. So the one we sell is a fixed index annuity. It's a cool product. Basically, what 99% of our customers, when they go with these kind of plans, they're either very close to retirement, they just retired, or they've been retired for a little bit. And basically their number one concern, they have two concerns. One, I've had a 401k or an IRA or stocks for my whole life. This is my life savings and I'm retired. I have to have my money last for my whole life. So they want to make sure their money lasts for their whole life. So we can do lifetime income things where we make sure, hey, you need $2,000 a month, $4,000, whatever it is. We're going to make sure this money lasts for your whole life. So that's one thing. The second thing, which is probably the main thing, is we just want to keep their money safe. They do not, like when you're young, like dude, today I want to check now, but I'm looking at the stock market and I'm like, holy crap.
Yep.
S&P's down like almost 100 points. I'm like, what's going on? When we're young, we can afford those kind of losses because next week, tomorrow, next month, it's going to rebound.
Yep.
Like you look at the stock market over the whole time of the stock market, dude, it always rebounds.
Yep.
The people that lose are the people that panic on a day like today, and they take their money out. They're like, oh my God, I just lost X amount. And then they don't realize, dude, this is a long game. It's going to go up. You're going to be fine.
Yep.
So, what were you talking
You're good. The annuity. So that
The annuity.
their biggest concern. So you're on the second concern now.
Yes.
And that is, I need to protect my money.
Yes. So, so those plans, like a 401k, IRA, stock market, where like a day like today, they could lose a ton of money. They would. With the fixed index annuities, what's cool about them is basically we roll over their current retirement accounts, 401k, IRA, Roths, whatever it is. It can be money in the bank. Doesn't matter.
Wow. They
can put their money into these fixed index annuities because they're indexed, just like an index universal life. What that means is their floor is zero. Meaning a day like today when the market's negative, they're saying it's zero. They're not going negative. Now, because they have that low end protection at the zero, does that mean they're going to go make 27% in a year? No, the gains are capped. But historically, 6.5, 7, maybe 7.5, 8%, that should be a good average annual rate of return over the course of the annuity. And, you know, there's bonuses and stuff like that. But basically, it's to make sure their money lasts for their lifetime. And then 2, their money is safe. They're not young. They're not caring about, I want to make, 20% this year.
Right.
They said, dude, give me 5, 6, 7%, but I don't lose my money. I'm in.
And then how do these insurance companies have a product like that? Like I would imagine that they just have all the data in the world to support that they understand that these markets are going to do this percentage and gain every year over the course of a long enough period of time. And they're going to create arbitrage on the fact that, they say, okay, yeah, when the market's down, on paper, we technically lose money for a short period of time. But when the market's up, let's say it's up 7 or 8%, we're going to pay, 5, 6, 7%, which might be a percent or two less than what it's actually up.
Yes.
And they create that arbitrage. Is that kind of, it's just where my brain,
They're master investors.
Okay.
The insurance companies, there's no secret. I think they do have the most money in the country, if not
there's
top
like
2 or 3 industries.
Trillions of dollars.
A lot of money,
right?
A lot of money.
Yeah.
And so, they're cool with paying 5, 6, 7, 8% when they're getting, it's arbitrage when they're getting more. They also realize, with like life insurance, it's a sad fact, but a lot of people, they either when they die, their family has no idea they have it. And so they have no way of contacting the insurance company to get their death claim paid out. So it just basically goes unresolved. Or B, a lot of people, like the life insurance thing, what people have to realize is this is a lifetime commitment. It's not a 1 year or 2 year or 3 year. And unfortunately, a lot of people, maybe they don't think about that. Maybe they stretch themselves too thin. And after, let's say they're paying $100 a month. Well, a lot of people after 5, 10, 15, 20 years, they say, hey, I don't want this anymore. I don't need it. And they cancel it. Well, guess what? The insurance company just collected $100 for the last 5, 10, 15, 20 years.
Insane.
And they get to keep it.
Yeah. So. It's crazy, man. It really is. Talk to me about, have you ever created like, when we talk about like insurance and whole life and all this stuff, and then we look at, death benefit and stuff, like, have you ever done any or worked with any people that have like created different trusts and different things where like for their family, like when they pass away, like the death benefit will go into a trust, or like, have you ever seen people get creative in that regard?
For sure. Typically that's our higher end clients. That's the big term policies. That's the big IULs. That's the big whole lives. That's the big annuities.
Okay.
It's higher, income people that have a lot more at stake, higher assets. That's something you can do 100%. The other way you can do too is, you just have, your spouse, your daughter, your child, whatever it is, your son, they're the beneficiary. But the cool thing about life insurance is as long as there's a beneficiary named, it's going to pass to them tax free.
Got it.
Which is pretty cool.
Which is super cool.
Pretty cool.
Right.
They get a check in the mail.
Yep.
There's no probate. It's not some long process. And that's why it's so powerful, because it's like, dude, especially middle America and lower middle America, they're our bread and butter. The rich people of the country, of course, these are, like I said, part of the puzzle. We're going to help those people. We have great products. The bread and butter are those people that are paycheck to paycheck, little bit of savings, because guess what? When a family's paycheck to paycheck, let's say it's mom, dad, and 2 kids. The dad works. Let's say like he's a blue collar worker. Yep. Guess what, dude? When dad dies, the company or the family's in a tough spot. They don't have that much money. Mom hasn't been working, or maybe it's the flip side and dad hasn't been working. So when they get a check for 50, 100, 200 grand, dude, that's a huge deal.
It
And
floats them. Yeah.
the cool thing
Mhm.
is it pays out quickly. So typically within a few days to a week or 2 or 3, they're getting the check, they deposit it, and it fixes a lot of things.
Is there what would be the reasons that somebody wouldn't get a check? You talked about the 2-year thing, right? Like where they'll do a big investigation, because there's movies made about that, right? Where
Yeah.
you can take a policy out on somebody and then
Your wife or something.
yeah, like hire a hitman, or whatever, right?
Yeah.
So there's obviously that where you have this big kind of investigation. Are there any other reasons why a policy wouldn't get paid out, a death benefit wouldn't get paid out to a family?
Yeah, so that's one of the main ones. The other one is suicide. So most companies have a 2-year suicide clause. After 2 years, some of them actually do pay out. As crazy as that sounds. The other thing is illegal activity. It's like if someone is speeding on the highway crazy and they're on drugs or they're drunk or something, is the insurance company going to pay out the claim? Most time they're not, because it's like, that's crazy.
It's their fault.
Yeah, but
Okay.
typically after the 2-year contestability period, 9 times out of 10, it's going to be a super easy, seamless process. It's just typically within those 2 years, that's when the insurance company is going to do their due diligence and look back.
Sure. Got it. Yeah, that makes all the sense in the world. I want to shift gears a little bit because I want to have the opportunity to kind of peel back some other onions as we continue to talk. But I want to talk about the entrepreneurial side, the business side of you actually switching from that initial company to the brokerage side of things and then building it, right?
Yeah.
You fully built a legitimate company. Obviously, you got acquired. I want to talk a little bit about that. So talk to me about that process of building it. What did that look like practically for you, building this brokerage shop, right?
Yeah.
And how did you build it? Where did you start? How many people did you bring on? What did that look like?
Yeah. So, insurance business is awesome. The way it's structured, I always tell people is very similar to a real estate brokerage, to a mortgage brokerage, really, pest control, solar, any type of sales. You make money one of 2 ways, or both. If you're good and you're smart, you should do both. You make money on when you sell stuff, and you make money on the people or the team that you have when they sell stuff. Dude, we started selling a ton of insurance, both of us, 40, 50, 60, 70, $80,000 a month each. In person, back then it was still in person, so it was a little bit tougher. And then we really leveraged social media. We were super loud and obnoxious. And so, everyone from other companies, it was just straight up, dude, we pay better. We have better results. We would be your leaders. And by the way, we just made X amount this month. Look at our Chase, look at our Wells Fargo. So we started recruiting a lot of, agents that were already licensed. We definitely recruited also other just, random people, salespeople that had to go through the licensing process and get it, and then start. But that was our main thing. And it was crazy, dude. Like, it was our first 9 months, with our company, we were really just selling. We only had a few agents that we recruited on our team and they were selling with us. And then all of a sudden, about a year into it, we found some really top talented, good people at other insurance companies. They're like, hey, this looks way better. You guys showed me the money. Like, let's go. And from there, it's just a duplication effect. It was like, hey, now we have 10 agents. Now we have 50. Now we have 100. Today, where it stands, we have over 1,000 agents that write a policy every single month.
Wow.
We're fully virtual. So about 2 years ago, we switched from in-person, meeting with people, face-to-face at their home, kitchen table, whatever, to going virtual, which is super cool because, I love in person. I'm old school with that, but it's like, in order to scale, we realized, hey, instead of just hiring people in Arizona, let's hire people in all the different states of the country. And then also, we don't have to worry about just leads in Arizona, because that's a problem for anyone. You have enough salespeople and you don't have enough leads, that's an issue. And so we realized, hey, if we do it virtually, people can buy leads in every single state. Because what's cool about insurance is once you pass your state test, which you should be able to pass your state test within like a week or 2. After you have that and you pay everything, it's $250, $300 all in for study material, state test, state license, fingerprints, E&O insurance, everything. Once you pass the test, you can now purchase your license in every other state. So you can be licensed in all 50 states if you want to. And it's like a 1 to 2 day sometimes same day process where you go on the state website, you pay them like $20, $50, $100, whatever their fee is. Now you have their license. And so what's cool is like we have a lot of agents and they call themselves like time travelers, because let's say they live in California, they wake up at like, 4:30, they're on the phones by like 6 Pacific time, and they're calling people in Florida and South Carolina, North Carolina, Virginia, and then they kind of work back the time zones. And then maybe they work like Alaska and Hawaii when it's like midnight in Arizona or California, but it's only, 9 o'clock there.
Wow.
So it's pretty cool.
Yeah, it's super cool. What was one of the biggest challenges that you faced in initially getting that thing off the ground and getting your own company off the ground, hiring people? I mean, sounds like you had a lot of realizations along the way, right? Like what were some big kind of hurdles that you were facing at that time?
Yeah, I think one of the biggest ones was we wanted to do everything on our own. We wanted to be in control. It was our baby. We wanted to do everything. We wanted to wear all the hats. We then hired our first admin, our first staff, and she did the things that we didn't want to do. Like she did all the back end stuff. Like I just want to focus on selling, recruiting, and training. Like those are the 3 things that make me money. All the back office, calling insurance, like that does not make me money, and it takes a lot of time. So once we hired her, our productivity went crazy. And also it was like, this is nice because it's not just on us. Yeah. She's also helping. Then we hired another one. And once we started hiring staff, that was a huge thing. And then also I think just kind of like delegating and creating other leaders. Yep. So like with any sales team, realistically, you probably talk to the top 10, 15, 20 people in your business every single day. Anything over that, dude, that's really, really difficult to do because you have a lot of stuff to do. And so it's like, if you can duplicate yourself as fast as possible, get leaders in place where it's like, now, like, I don't talk to 1,000 of our agents every single day. That'd be impossible. But dude, we have amazing managers. We have 30, 40, 50 amazing managers that are all in charge of 5, 10, 15 agents, and they help them in their go-to. And it makes it a lot easier to scale when you have help and you duplicate yourself.
Yeah, entrepreneurs are terrible delegating initially, right?
Terrible.
And then, but once I've seen, entrepreneurs that like, man, once they get it, they get it. Like they got it. Like they're like, oh yeah, I got to delegate. Like I have, but like every person who starts a company, they struggle real hard. And some people, they never do it. Like they never delegate, and therefore they never scale, right?
Yeah.
And I've obviously been there. We've scaled quite a few different companies, and man, I wouldn't be able to do like a 10th of what we do if it was just me doing it. Like there's just no way. Yeah. Right? Like we only have 24 hours in a day. We just don't have enough bandwidth. I mean, you'll quite literally kill yourself trying to do it all. Yeah. If you're not careful. Yeah, no, I agree. When you started this brokerage shop and you kind of pivoted to this and you get out of medical sales, you and Nina, you're going all in, right? Did you ever have the intention of getting acquired or selling, or like, no. Was that even a thought?
It wasn't really even a thing. When I was kind of first getting started, and Nina had been with the company for about 6 to 9 months, probably 9 months, longer than I had at that time, we started hearing about this company. And the owner of the whole brokerage, he partnered with this company and he sold his business. And we're like, oh, that's kind of cool. But no, when we started, we just wanted to make money, bro. That we were just trying to make money, trying to survive, trying to help people. And then after, income started scaling, the business started scaling. We were like, oh, that would be pretty cool. And then it was about 2.5 years from when we started to when we got acquired. And when that process started happening and kind of like learning about, private stock and private equity and, the multipliers and EBIT and all this kind of stuff, that was pretty cool. But at the start, dude, it wasn't even on the radar.
Yeah. It's so cool. Yeah. Like PBD is obviously pretty loud about the fact that he sold a company, right? Yeah. For anybody who's watching, who might be familiar with PBD, Patrick Bet-David. And what did the company that Patrick Bet-David built, was it like pretty dang similar to like what you built?
I would say so. Okay. Yeah. PHP. I would say they were kind of a hybrid of like my first company and my current company.
Okay.
So yeah, but same kind of like brokerage thing. They have multiple carriers, term, IULs, annuities. That's their bread and butter.
Got it. Okay. So. How long did PBD do that? Do you know?
I think I think with PHP, I want to say, if I'm not mistaken, I think about 15, 16 years,
Okay.
14 years.
Yeah. So a little bit of time.
Yeah.
Yeah. But he did really well on the exit. Obviously, he's talked about that numerous times. Yeah. No, I mean, I think, dude, I didn't even know that you could get I didn't even know that was a type of business that private equity would even take a look at.
Yeah.
Like, I was kind of blown away, actually. I heard, obviously, you said it, and then we talked about it a little bit before the show, and then, PBD, I've heard him say it before, but I guess I've just never really put two and two together that, like, that was a thing that private equity would even embark on that kind of journey.
Yeah. What's cool, and a lot of people don't realize it, is the insurance business is an amazing way to generate a lot of capital. And then from there, just like any business, then you deploy your capital in different industries.
Yeah.
But dude, there's a lot of people in the insurance industry. Patrick Bet-David, Ed Milet, one of the top earners of WFG, like legend in the insurance business. But a lot of people don't know that, but that's how he made his big money initially. Andy, I know who you're friends with. He was working with us. Bradley, he was working with us. We have kind of a couple like NFL players, Vince Young, Sean Merriman, like all these guys. And I think it's just something where it's like a lot of people, they see the residual income, they see, you can scale it, and it's like, okay, cool. That makes sense to me. And then, if you can build it big enough, then there's a lot of companies out there that, look to acquire, life insurance, health insurance, any type of insurance.
Mm-hmm. Yeah, for sure.
So.
What would you recommend for somebody who might be watching, who maybe is doing the insurance game? They're trying to do what you did, right? They're trying to get to this point where they can build a big enough operation to get potentially looked at to being acquired. What would your biggest recommendation be? I know that when, I've had multiple people on my podcast in different industries that have been acquired. And one of the things that, private equity in these different companies look at is, like, how dialed is the company, right? Like how good are your systems and processes? Like, if the owner, the CEO, like, wasn't there, like, would it keep running? Like, does it rely on that guy, on one guy, right?
Yep.
And like, there's different things that they're looking at. So like, what would your advice be for somebody who might be trying to build what you built?
I would say, the first thing you have to do is you have to master the sales process. That's what proves the concept. That's what brings in the revenue. That's what makes you and allows you to be able to invest, hire staff, get an office, buy leads, buy marketing, all this kind of stuff. So that's super important. For me, it's like some people get so focused and stuck on all the technicalities of, I need to have an S Corp. I need to have my accountant. I need to have QuickBooks. Dude, we didn't have QuickBooks or anything like that for our first 2 years in the business. Just because we were so dialed on selling, recruiting, training, scaling income. And it was kind of like, once we get big enough, we'll worry about that. Yeah. And so I always tell people that stuff's important, but don't waste all your time and get stuck, because unfortunately a lot of people, they do that deal and then they never actually get started or have success. So that's important. But the biggest thing, like if you're an agent watching this right now, is I think you take a look in the mirror and say, one, how much am I selling? And then two, am I someone that someone would reach out to and they should follow? And if you're not, then it's like, okay, well, how do you expect to build a big business? Yeah, there's some people that are amazing networkers and they build a big business without having to sell and stuff. But dude, 99 out of 100 times, the person who built the business at one point was the top salesperson. Yep. And they proved the concept, and then they were able to train and duplicate themselves to build that thing big like they wanted to.
Totally agree, man. Yeah, I couldn't agree more with that. I mean, I look at even the companies that I built, and I tell my team, I'm like, guys, I did every role that we have right now, that like every type of different role that we have, like I did every one of the roles at one point in my life at a very high level. And so like, you're 100% right, dude. Like it's extremely difficult to get taken seriously as a leader if you haven't been in the front, leading from the front, at least at one point in time.
Yep.
You don't have to do it forever necessarily,
no.
But at one point in time, you have to have had done it so that you can talk to it and speak to it at a very high level. People take you seriously. Otherwise, people aren't going to follow you.
Yeah, and it inspires people. It shows them what's possible, but then also it eliminates excuses.
Yeah.
Like that's one of the favorite things about selling a bunch of insurance at the start is like when people, like we were in person, we were door knocking people. It's like, in Arizona, like one summer my AC wasn't working. I was driving to Tucson. My back was like drenched by the time I got to my first appointment. And so when people complain now, I'm like, dude, seriously, you get to sit in air conditioning, you get to dial the phone, you have all these amazing companies' products, you have leads, you have way higher comp, and per policy than what most people start at, than what I started at. And if you can kind of share that, then it's like, okay, you're right. And then it eliminates excuses and it just focuses on the solution and doing what they should be doing.
Sure. Yeah. And I would imagine too, it's an industry where people, like you said it a little while ago, but like the leads that you're talking to, they're already interested. Like I would imagine it's not as hard of a sale as probably some other industries where when you look at it, it's like you probably just, and correct me if I'm wrong, you probably just have to be really good at explaining it to people and breaking it down and just kind of, giving them the information in such a way that they can digest, they can understand it, and they can see that, oh yeah, this is the solution to my problem, right?
Right. Yeah.
Yeah.
I always tell people our business is more almost like a customer service role almost than like a hardcore closer type of deal. Cause you're investing, you're buying the interest, you're buying the leads. From there, it's your job to find the why and then just put them in a good product and explain it correctly. But what's funny is like we have a lot of people in our company that they make crazy money just selling insurance. They don't want to build a team. We have dudes that make over $1 million. We have one dude that makes over 1.5 just selling insurance. We have a lot of people that make multiple 100,000. And the difference is typically it's not that much skill difference between that top guy that sells 1.5 and the guy or gal that sells 200 300 a year. It's not that much skill. Like
what is the gap?
It's relatively easy.
What's the difference?
It's repetitions and it's lead spend and it's leads. That guy that does all that volume, dude, he runs 50 appointments a week. He works 6 days a week. He busts his butt versus the other guy or gal that maybe they do, 100,000 a year. Well, they're probably only talking to 10 appointments a week or 5 appointments a week.
Got it.
And what's interesting is like, whether you're messing around on your phone or like whatever, most people Monday through Friday, at least, they shower, they get dressed, they go into the office, their mobile office, and they're like at their desk. And so they're working, even if they're messing around, like they're still in work mode. What I found though is the difference between like 10 appointments and like 30 or 40 a week isn't that much effort. It's pretty much the same amount of time you're going to be messing around or talking to your friends or talking to your boss or whatever it is. And so if you just give yourself a chance. And what I love about the business is, obviously it helps to be skilled and be a really good salesperson and, influential, all that kind of stuff. But it's really about repetition. And so what I always tell like our agents is, dude, even if you're like a 30-40% closer, if you're not the top salesperson that closes 90%, that's okay. Just work the numbers backwards and know that, hey, instead of 15 or 20 appointments like the top guy does when he has 20 and he sells 18 out of 20, you need to do 30. And you're going to sell just as much because you have the reps. And so you can really work it backwards and basically just figure out, hey, marketing spend, appointments, activity, and then you plug in your close ratio. Some weeks will be higher than others. Some weeks will be lower than others, but it's very predictable to predict your success and what you want if you just work it backwards with all those things.
What I'm just curious because I'm so intrigued and curious about different industries and how the KPIs are different in different industries. What would you say for somebody who's in life insurance and they're buying good leads, so they're going to a good source, which I'm sure there's a ton, right? They're buying good leads, they're spending the right amount of money to buy the good leads. What is a good close ratio, would you say? Like how, like I know in real estate, right? Like it's got to be a lot lower than in life insurance because in real estate, a lot of the times, you're calling them, right? Like they're not inquiring. Like you're like, hey, are you interested in selling, right?
Yeah.
And so unless you're doing inbound marketing, which is a different story, but yeah, when it comes to life insurance, what do you think a good close rate is?
So it depends on how you're running it. One way is to basically just do one call closes where you're calling the person. Basically, if the lead comes in, you call them and you try to sell them on the spot. That's one way. The second way is that you call them, you vet all their information, you set an appointment for like later in the day, the next day, or the day after. If you're setting appointments, I would say the close ratio will definitely be higher, of course, because you're cementing those people are super interested. You have a time. If you're doing the one call close, it's going to be a little bit lower. And so I would say like the one call close, like kind of quick deal. If you're talking to like 3, 4, 5 people where it's like a true, you get to the numbers, you quote them, you give them the option close, you should be selling, I would say 1 out of 3, 1 out of 4, 1 out of 5, probably at the worst. If you're setting appointments, you should be closer to 1 out of 2, 1 out of 3, and somewhere in there. Now, is there going to be weeks where you close 3 out of 3? Of course. But I would say 1 out of every 2 or 3 should be, that's kind of the standard.
Got it. Okay, cool. And then is there an infinite amount of leads that you can buy?
Yeah.
Okay. Like pretty much.
Yep.
So you're not going to run dry.
No.
Okay.
Yeah, there's so many insurance agents out there, across like, all the companies, the whole landscape. And that's something that's pretty cool is like, there's always leads. Now, I will preface that by saying maybe if you're at a company, especially a captive company where you don't have leads, you can't buy leads, you're going to run out of leads because you're depending on your boss, your company, you're depending on your own marketing, unless you're some like, you have really wealthy parents that know everyone, you have a huge, network or huge social media, that's going to run dry eventually. Yep. And so that's why I'm like, dude, if you're a regular person, you buy leads, you can talk to people. That's the easiest solution for this business, I think.
Got it. Okay. Yeah, no, it makes total sense. I mean, I can totally understand that. I want to pivot again and talk a little bit about, where does Hayden Hill invest now? Right now, you've obviously achieved a really awesome level of success at a young age. How old are you now?
I just turned 29.
29. Okay.
3 days ago.
We're the same age. I'm a little bit older than you. I'm 29. I turned 29 in May.
Okay.
Where do you talked about crypto. You talked about the stock market, real estate, right? What are you diversified in all the asset classes, or how do you go about now continuing to build the wealth?
Yeah, for sure. So I think, everyone has their comfort level in terms of like savings. I think that's an important part, and that's a very safe part. It shouldn't be a ton of your net worth, but most people, some people are cool with having 50 grand, 100 grand, 200 grand, whatever it is, depending on your bills and everything. I would make sure you have a safety net in case shit hits the fan and you need to access money. So that's one piece. I'm super into stocks, super into real estate, couple different avenues there. Private equity. I've recently in the last, 2 years started really learning about. The returns can be incredible compared to anything else. And then the last thing that I like, honestly, is like I'm a big watch guy. Mm-hmm. And so over the last couple of years, I've bought a lot of watches, sold a lot of watches, and I love it, because once you kind of get educated in the brands and the models and the timing of the market and everything, it's like you can get a watch, you can wear it for a month, a year, 2 years, and you can flip out of it, and you can either make your money back. So you basically wore a watch for free for a year or two, or in most cases, if you buy correctly, you can actually make money.
Talk to me a bit about real estate, right? I have to ask, of course, I'm a real estate guy.
Yeah.
What types of real estate do you like? What types of real estate do you like to invest in, or would you like to invest in the future? Just like what type of, I guess, is it like multifamily, commercial, single family, duplexes, quadplexes? Like, what do you like?
Yeah. So right now, what I like is mostly single family. I do want to get into multifamily, commercial, that kind of deal later on. But right now, basically, it's like fix and flips. And so residential fix and flips, it's Section 8s. And so I found a really cool niche there, that I'm building. Don't do any wholesale or anything like that in the future, maybe. And then also, like we were talking about, I think a lot of people say like your primary residence, maybe that's not a good investment, whatever. Well, if you don't buy it correctly, just like anything, it's not.
Yep.
If you do buy it correctly, then it can be a fantastic, you have a lot of tax breaks, you have appreciation, all that kind of stuff. So that's kind of where I'm at now. In the future, once I keep building the properties and the flips and everything, the commercial, that space is really, really, really cool.
Sure. Yeah. Are you enjoying flipping? Are you flipping at all right now?
So I'm investing in the flips. I have some people that, we're partner with that they're like the general contractors. So it's more hands off. For us, we're kind of just investing, but it's super cool, dude.
Yeah.
Like, watching everything, transform the ideas and everything. So, down the road, insurance takes up a lot of my time at the present moment, but down the road, that's something where I'm like, dude, it'd be cool to have a couple of projects going on at the same time and really like dive into that.
Yeah. Because what is the goal? Talk to me about like the next 10 years. Like, what are you thinking? Like, you eventually, I mean, will you do insurance forever, or will there be a day where you kind of say, okay, I'm going to move on,
Yeah, I don't know, man. We'll see. A lot of things can change and everything. For me, I think what I've had a crazy realization in the last couple of years of like what's actually important, what's defined by success. I think growing up, any entrepreneur is like, I want to be like a billionaire worth $100 million. If that happens, I'm not mad, of course, like that's awesome. But what I've found to realize is, one, money doesn't define you. It's a tool and it's a luxury, and it keeps, in most cases, it'll keep your stress levels down and some security for your family. But what I enjoy, honestly, man, is I enjoy investing, but traveling,
Yeah.
experiences, and it's like the definition now. I'm like, dude, like my health, my wife, our future kids and everything, like that's super cool. And so whatever number that is financially that ends up at, like it is what it is. But now I'm more focused on experiences, having security long term, and also not having to work. Like,
Yeah.
like I love working, but at the same time, it's like, what's the point of working if you can't enjoy it?
Yep.
So where I'm also at with in terms of like investments and stuff is, I try to be as safe as possible. If it sounds too good to be true, it's too good to be true. But if you can compound a bunch of safe investments over time, then it's like, 10, 15, 20 years on the road, whenever it is, then it's like, hey, dude, we're all passive at this point. We have rentals, we have stocks, we have private equity, all this kind of stuff. And so I don't have to work if I don't want to. And I think for any entrepreneur, that's the key thing of being able to reach a point where you say, hey, now at this point, I can hang out with my family. I can do this. I can do that. I don't have to worry about financial stuff. That's the ultimate deal.
Yeah. I couldn't agree more. How have you found balance, or the like quote unquote balance, right? Obviously, Tony Robbins describes it as work-life integration, right? Which a lot of entrepreneurs can relate to. But when you were scaling the company versus today, has it changed? Like, was it like 2 or 3 years ago, you were grinding like all the time, you and Nina, like,
Yep.
making a ton of sacrifices, like whether it be like health, family, whatever.
Yep.
And then it kind of like flip flopped, like once you started actually having like some pretty good cash in the bank type of thing,
Yeah.
where then you started to implement more of a routine. Like, walk me through that kind of
Yeah.
journey, that evolution.
Yeah. So I agree with what Tony Robbins says. It's like in the first 3-4 years, dude, there was no such thing as balance.
Yep.
There's none. Gain like 20, 25 pounds, start getting a little bit chunky, which, happens to a lot of people, which, if you're young and you're building a business, make sure you take care of your health. Wake up an hour extra early, work out in the morning, get it done with. Because most of the time when you say you want to work out at night after a long day, dude, you're not going to. And so, there was no balance, dude. It was I would say our pivotal year. During COVID, we took about 100 flights that year.
Wow.
Mostly to go see clients and sell, or to go meet people and show them the opportunity and recruit them into our business. So there was no balance at that point. And to be honest, I think no matter what business you're doing, it's going to take a few years of just all out focus. Yeah. There's going to be some things you don't get to do, all that kind of stuff. But then once you, start making good money and you kind of start to break away and get more free, then it definitely changes.
Oh, for sure.
So now you have, people to do things for you. You have delegation, you have passive income, all that kind of stuff. And your roles start to change. It's like in the start of your business, you're the salesperson, you're the marketing person, you're the training person, you're the recruiter, you're the janitor, like you're doing everything. After a couple of years of building it, now your stuff is more high level. And of course, like now at this point, it's transitioned to mostly like, if I have my phone, like I'm good. People call me, we do FaceTime, we do Zoom trainings, everything, like I'm good. And that's something that's pretty cool. And I saw, Alex posted it yesterday. He's always, in Europe and stuff.
Yeah.
He talked about, people that start making good money and become free, they don't take vacations anymore. Like their life work thing is all one. And so now we just travel to different places when we want to throughout the year, around the world. And if you have your phone, what's cool is you can still work. It's not like, and I think most people don't realize the entrepreneurs, like we're working, maybe when we go to sleep for 5-6 hours a night, 7 hours a night, maybe your brain kind of turns off, but the other, 18, 17 hours, you're constantly working. So it's way different than a job where it's like you're clocked in for 8-9 hours. Like you're constantly, and it's like, you got to do what you got to do.
Yeah.
Take calls in the morning, take calls late at night, whatever it is.
Yeah. No, I couldn't agree more with everything you said. I think, I've seen some people out there talk about like, you can have it all, right? And I do believe you can have it all, but I don't believe you can have it all in every season of life.
Right.
I think there are going to be seasons where you are in grind mode, right? And you will sacrifice other areas of your life when you're in that season, like just straight up. Like there's no, I've never seen anybody be able to pull it off from day one to forever, to just have a linear, they're well-rounded with their family and their health and their business. And it's like, no. you're going to be out of balance probably for a little while.
Yeah.
And then you eventually kind of start to figure it out, and then you work on it, right? But
Yeah.
you never start out that way.
For sure. And on social media, a lot of people, they just like, they see where you're at now and they think that, oh, that's how it always was. But they don't see the 4, 5, 6, 10 years ago for most people, which is sometimes hard for new people that are kind of starting out on their journey to realize. But it's going to take a couple of years, and you need to dominate like one thing.
Yeah.
I'm super big on, like, some people, I want to invest in crypto and I want to invest in real estate. And I'm like, what do you mean? You don't have any money. Like, you don't have enough money to be doing that. So focus on one thing, dominate that. And then from there, once you dominate that industry and you start getting a lot of capital and everything, then 100% deploy your money in different things. But at the start, dominate one thing. That's where the money's at. It's not trying to be, good in 6 or 7 businesses. It's being great in 1, maybe 2.
I agree, dude. I agree 100%, especially in the beginning, man. You can't, the old saying, if you chase 2 rabbits, you'll catch neither, right? Yep. And it's so true, in the beginning. And I always tell people, I say, look, when you can truly afford to hire somebody to catch the other rabbit, then you can do that, right? But you can't catch them both.
I like that. Yeah.
So I agree, dude. Now even me, like we run multiple different companies, but they're all vertically integrated. They all, like I shut down anything that doesn't have anything to do with like my main thing. I don't do it anymore. There was a time where I did, and I realized it was a mistake. I was taking my eyes off the prize. Yep. I was doing ATMs and I was doing this and this and that. And it was like, dude, when I was doing that over there, it took away from that over there. Right.
Yep.
And then I was like, no, I'm just going to do real estate. Now I own multiple real estate companies, but they're all similar enough to where if I'm over there, it isn't totally taking away from over there. If anything, I might actually be adding value over there,
Yep.
Which is super important, right?
Yep.
So I totally agree with that, dude. Do you like crypto?
I don't really understand crypto,
Yeah.
to be 100%. I have the basis of it, the regulation side of it and all that kind of stuff kind of makes me a little bit weary. Now the people that bought it when it was super cheap, like, awesome. I was considering highly like 2 years ago when it was around 20. Now it's almost at like 70, I think right now, 65 or something. But I didn't, but it goes back. I think Warren Buffett said a quote that I always remind myself. I always tell my wife, I always tell people that ask me for like investing advice. He said, sometimes the greatest investment you can make is no investment at all. And so it's like, you work so hard to get your money. If it's something that you do your research on and people that are making money and everything and you're smart, 100% do it. But if you don't, dude, it's almost like gambling. Yeah. And I like the way I saw all that, which may change in the future, but I'm like, I just don't understand it enough, which I don't invest in things that I don't understand. And then 2, like, it's without the regulation stuff, I kind of see it as a gamble. And so I'm just not going to do it. And, am I upset that I didn't make the money by getting in early? That would have been nice, but at the same time, like, I also could have lost my ass.
You could have.
It could have been the opposite. I know one of our good friends, dude. I think it was one of the big coin. I don't want to say Coinbase, but one of the
like FTX or something like that.
Dude, he had over $1 million in crypto, and it froze. Like, he's only gotten some of his money back.
Yep.
And so it's like, just examples like that. I think it's cool and I follow it and I'm interested, but I'm just personally not invested right now.
100%. Yeah. No, real estate's a lot safer, conservative, and the stock market can be too, right? If you're invested in the right stocks, S&P 500, whatever, the long enough period of time, you're going to make money. Yeah. Right. 100% of the time. So my final question for you, dude, is, looking at your life, your journey, your success, your failures, all the things that you've learned, if you could give just one piece of advice to any maybe entrepreneur, any young person listening, anybody that just wants to live a better life, dude, they want to do some of what you've done in your life, and it could be related to anything. Like, what's kind of one thing that you've lived by? Could be a quote, could just be a motto, could be just a piece of advice that you heard a long time ago that you would recommend everybody need to know.
Yeah, I think one thing that I would say is, realize that it's going to take time. Realize that the person who quits early will never win. And it's not always going to be sexy and glamorous. Like, business is hard. A lot of the time you don't want to do things, but you have to do them anyway. And if you just perfect your skills and master it, you will eventually have success. Some people, like, I always tell people that come into our business, I'm like, some people get it within a week. Like, they're amazing after a week. Some people, it takes 3-4 years. And then you have your breaking point, you have your breakthrough moment, and it changes. And so I would just say, have patience, work hard, perfect your skills. And then also I would say, once you start making money, don't be a dummy. Be smart about it. Realize that nothing is forever. No matter how good it is or how bad it is, nothing is forever. And so careful with your leverage, careful with your expenses, invest in smart things, and just realize that if you live under your means for a couple years until your business really starts taking off, you have that kind of money, dude, you're going to be ahead so far after a couple years versus some people. It's like, maybe they make more money than you, but they spend like a crazy person. They have all this stuff. And it's like, dude, they still are going to have to be working by the time, 67 years old, which for me personally, I just don't want to do. And so stick to it, perfect your craft. Sales cures all if you're an entrepreneur. And then just be smart. You work really hard to make your money. So be smart with keeping it and investing it. So that way down the road, you don't have to keep on working so hard, and you can start to really enjoy your life and do what you truly want to do.
So powerful, dude. Yeah, everybody needs to know that, because I think a lot of people have made the mistake of almost everything you just said, right? Including myself, dude. You know, like I've been there too in my life, and yeah, I couldn't agree more. Hey, Hayden, where can people find you if they want to come work for a company that you're involved in or whatever? They just want to contact you. How do they get a hold of you?
Yeah, if I'm on Facebook, Instagram, all that kind of stuff, LinkedIn. Probably the best way is Instagram. So my username is Hayden, my first name, X, and my last name Hill. So Hayden X Hill. Shoot me a message. We'll connect and see what we can do.
I love it, dude. And I'll put all your information down below as well.
Awesome.
And I appreciate you being on, man.
I appreciate you, man.
Yeah, of course. We'll do it again eventually. We always do round 2 after a year or two. So we'll see where you're at in a couple of years.
Let's go.
And I appreciate you. And if you're still watching to the very end of the podcast, I do appreciate you as well. If you're on YouTube, make sure you subscribe if you haven't already. Like the video, comment down below, go follow Hayden. All of his information will be down below. And I look forward to seeing you in the next episode.